Hello, my name is Adán Jiménez. I'm a junior in the AIM program studying finance and economics, and today I'll be pitching WIX.com, ticker WIX. WIX is a comprehensive website builder for content creators of various skills, interests, and goals. The company is headquartered in Tel Aviv, Israel. Wix generates revenue through creative subscriptions that offer advanced features not available in unpaid versions, and business solutions that offer additional applications and tools for all users. Some of the tools available with premium subscriptions include personalized domains, removal of Wix ads on user sites, and search engine optimization tools. Business solutions include G Suite, which Wix resells from Google, and Wix Ascend, which is a bundle of various tools to increase business-to-consumer communication through instant messaging, social media integration, invoicing, and more. I'd like to make a quick point of clarity that users with premium subscriptions have access to many of the tools in the business solutions segment, depending on the plan that they have purchased. Any purchase of these products within a subscription plan is recorded as creative subscription revenue and not business solutions revenue. Wix serves over 165 million users around the world and has quickly become the leader in the do-it-yourself website builder space, growing sales at a CAGR of nearly 40% in the past 5 years. The company has earned its 37% market share, defined as percentage of total websites built on simple design platforms, through a robust platform that serves every kind of content creator, from beginner to expert coder. As the company has increased its suite of products and its strategic focus on enterprise clients, it has been able to generate sales at an incredible rate. I'll touch more on this in the next slide. Furthermore, Wix consistently generates healthy cash flow with 84% of annual subscriptions that pay up front, balanced with 16% of monthly subscriptions that pay premium rates. The company also has strong liquidity with $560 million in current assets, significantly outweighing their debt and protecting them from uncertainty of market conditions following the COVID-19 outbreak. I strongly believe that bearish market sentiment has created an excellent entry point into a company that will weather the storm and ultimately come out on top. This graph highlights one of the most critical components of Wix's tremendous sales growth. Each line represents total revenue collected from a group of new users in the first quarter of each year through 2019. The growing slope shows the increasing monetization of new users each year. For example, Wix collected $113 million from the 2016 group for an average of $7.1 million per quarter. The company then collected an average of $11.4 million per quarter from the 2018 group just 2 years later. Consistent consumer behavior suggests that this trend will continue moving forward. The freemium model. As I mentioned earlier, Wix offers free and premium versions of their website builder that allows them to tremendously increase their reach. Wix currently has 4.5 million premium subscribers that have grown at a 3-year CAGR of 19%. Nearly 200 basis points greater than the growth of total users. But unpaid subscriptions also have their benefits. A study by Harvard Business has found that a free user is typically worth 15 to 25% as much as a premium subscriber, with significant value stemming from referrals. There's also the benefit of free advertising on sites made with the unpaid version, and the potential of future conversion from users looking to expand their functionality. For WIX, it seems that free can equal cash. The Editor X Factor. In February 2020, management announced Editor X, a product that allows advanced content creators to build on a cascading style sheet grid, essentially resulting in a dynamic functionality for creative displays of content. Editor X is projected to be released in the second quarter of 2020, and together with Corvid, WIX's coding system, will increase the company's total addressable market to over $300 billion. In short, this product completes WIX's portfolio of products that reach all levels of content creators. Operational efficiency. In the past few years, operating expenses have come down from 95.4% of revenue to 84.7% in 2019 as a result of successful scaling and operational efficiency. WIX is currently undertaking a training program for employees, which is estimated to increase earnings by 5% year over year. Marketing and selling expenses have consistently been recuperated in 7 to 9 months and typically generate 3.5 times the initial expense within 3 years. Finally, research and development expenses will continue to decrease as a percentage of sales as the company's margins begin to stabilize. As a result of these factors, it is projected that WIX will finally make earnings in late 2021 to early 2022 and yield strong returns going forward. Most of this information speaks for itself, but I would like to briefly discuss my process. My DCF model is weighted at 70% because I believe it is the most accurate way to value a company that is currently investing aggressively in its growth and has not yet generated earnings. Still, the companies I use for my peer valuation are all hyper-growth content management system providers, most of which have also not made earnings. I conducted a price-to-sales valuation weighted at 20%, as sales are the driving factor that investors are looking for in these companies. Finally, the price-to-book valuation was conducted primarily as a conservative measure, and so it was weighted at 10%. This resulted in a price target of $158.89, representing a potential upside of 24.28%. The following are a few key risks that I've identified. Intense competition. WIX operates in an industry that is demanding of tremendous investment and results in little to no earnings. Although WIX is currently the leader in the industry, competition will continue to rise and strategic growth must be executed effectively. Insider holdings. As of February 2020, 7.6% of ordinary shares were held by directors and executive officers. The company also has a tendency of offering share-based compensation to employees. If these practices become more frequent in the future, existing shareholder ownership could be adversely affected. This was something that I accounted for in my model. And of course, COVID-19. Management has stated that the recent outbreak of the novel coronavirus has not changed their quarter one guidance, as social distancing has increased the demand of web services. Still, a prolonged recession could potentially result in premium subscription cancellations. CEO and co-founder Avishai Abrahami has nearly 30 years of experience in the tech industry. He has led the development of several startups, including AIT Limited in 1993 and Sphera Corporation in 1998. Nir Zohar is the president and chief operating officer who drives the successful scaling of the company. He has been with WIX since 2007. In closing, Wix.com offers the best website building platform on the market with a comprehensive portfolio of products and solutions that span virtually every content creator's needs. The company has rightfully earned its place as the industry leader, and market inefficiencies resulting from the COVID-19 outbreak have created an excellent opportunity to invest in a company that will generate strong returns in the midterm. Thank you for listening.